Hello and welcome back to Miss Finance. This video is a continuation of the AAT Level 3 Synoptic Episode 2. I hope you find it useful, so let's get straight into it. They could introduce segregation of duty and ensure there is a second review in the absence of the manager who usually reviews. Alternatively, they could ensure that all members of staff who prepare VAT returns are appropriately and sufficiently trained to reduce the risk of errors or omissions in the future. So, next question. You are a junior member of staff in an accountancy firm and you answer the door to a client. While they are waiting for the manager to arrive, they ask if it would be okay for you to provide them with the personal telephone number of their lead competitor who is also a client of yours. What ethical principle and threat is most relevant here? So here, there is a threat to the confidentiality of the competitor and accountants are bound by this ethical principle. And secondly, there is also a legal requirement to not disclose such information as detailed in the Data Protection Act. So appropriate authority must be given before any such information is being disclosed. So let's move on to the next question. So name the 5 different business organisation types. So first of all we have a sole trader, and then we have partnership, and then limited liability, LLP, then we have a limited company, and then we have the charities. Next question. How are distributions paid out in a sole trader and a partnership? So they are paid out via drawings, and amounts are withdrawn from the company during a year. So next, a client of yours is thinking about going into either a partnership or a limited company and cannot decide which and has asked for your guidance. Provide some details behind the advantages and disadvantages of a limited company. So we start with the limited company first. So the pros is that there's limited liability of individual shareholders, and that's limited to their investment. And secondly, that credibility might be enhanced. Cons with a limited company is that they are complex to set up. You also have additional admin burdens, such as filing to Companies House. Your annual statements are public, so competitors can see how well you've done, what you've invested in, etc. And also, you have to adhere to a set format and terminology in your accounts. So let's move on to the next question. So here we're given a VAT control account, and what we're being asked to do is to complete the VAT control account for some errors that have been made. So what we've got, let's just write this out quickly. So we've got the cash book of 7250. We have the purchases day book of 98,000. We have sales returns 4525, and we currently have a balance carry forward 34475. On this side we have a balance brought forward of 7250, sales day book of 120,000, and a purchase returns of 17,000. So all in all, that is 207250 and 207250. Get the ruler out. So these are your debits and these are your credits. So what we're told is that VAT on a sales invoice was wrongly recorded as sales for £5,000. So that means that over here we don't have VAT of £5,000, because if you think about a sales invoice, that's credit sales invoice, credit VAT, and then debit the debtors control account. So let's write that here to help you remember. Like so. So we need to add in £5,000 here for sales. And then we're also told that a supplier had overstated VAT by £150 on an invoice. that we've received before the year end and paid before the year end. So usually your purchases would sit over here, but they've effectively overstated this, so this is too much at the moment, so we need to reduce that by 150. So if we put purchase returns of 150, so that means that this has now changed. So in the next question they've actually asked what the revised balance carry forward would be, so let's just put a little cross through that because that's no longer the case, and instead that's going to be 39,625. So that's changed and that's changed. So that's 212,400 and that's 212,400. So this figure here is always a balancing figure. So next we're asked, would this figure here be an asset or a liability? So you can quickly see, even without looking at anything else, sales and all your purchase returns, etc. here are far larger than any input VAT. So if your output VAT, so your sales, etc., that you've collected, so you've collected VAT over here, is greater than what you can reclaim back over here, it means that you owe HMRC. So this is going to be a liability. So I hope you found this video useful. Please do give it a thumbs up if you liked it or you did find it useful. Consider subscribing and I shall see you on the next video.